Welcome to the Maryland Mortgage Rate Weekly Mortgage Market Update for the week of September 9th, 2013. Hello, I'm John Thomas with Primary Residential Mortgage, here to give you your update. Last week was not good for Maryland mortgage rates. Rates surged higher as the mortgage bond market sold off. If you look at the chart on the screen, you can see that's the 6-month view. You can see mortgage bonds have sold off since May. Now, it's been a jagged up and down sell-off, but the long-term trend is for mortgage bonds to keep selling off. We keep reiterating this, and they keep selling off. So even when they recover, they're going to sell off again, unless we break that downward trend. So if you look at the last 30-day chart, you can see that mortgage bonds on Monday sold off. Tuesday sold off. Wednesday sold off. Thursday jumped down, and big sell-off on good economic news and anticipation jobs report. Now, Friday, green candle, we did have a recovery after the less than expected jobs report, but the market is volatile. We're going to recommend locking your Maryland mortgage rate to start the week because this downward trend is going to continue. We could see a rally off of that, so if you're not closing in the next 30 to 60 days, you can float, but a lot of volatility. Do recommend locking your rate. Take advantage of that little jump back in rates on Friday. Now, if we dig into the reports, what was going on, the big news was Friday's August 2013 jobs report, which showed 169,000 jobs created, below the 177,000 expected. And the labor force participation rate dropped to a 35-year low at 63.2%. Now, that's a measure of the number of people eligible to work 16 years and older are actually working. So that is not good. We need that number coming up, need people back to work. Now, we did see the unemployment rate fall from 7.4 to 7.3%, but that was because people dropped out of the workforce, not because we put people back to work. So again, not a good thing. And then we dig more into the jobs report. They also revised June and July's numbers. If you look at the screen, lower by 74,000 jobs. So July only created 104,000 and June only 172,000. So, not good news out of the jobs report, but the 169,000 jobs created for August may be enough for the Fed's September 18th to start the bond buying program to taper it down, maybe by $10 billion. They're buying $85 billion now. Or they may push it out to next year. We just don't know. So that's going to cause a lot of volatility in the market till that meeting on the 18th, so that's why we're recommending locking again. Now, if we also saw that CoreLogic released home prices. The CoreLogic Home Price Index for July 2013 showed a year-over-year increase of 12.4%, and it rose 1.8% from June to July. But good news is we're still 17.6% below the peak in 2006, so there's still upside, so it's still a great time to get out there and buy and take advantage of this increasing market. They're projecting August to be up again by 12.3%. So the housing market is going strong. We are recommending is to get out there, get under contract before the rates move up and before home prices move up. Last week we also saw a release of the weekly initial jobless claims on Thursday. They came in lower by 9,000 claims at 323,000. But it also showed there's still 2.96 million people on unemployment insurance. So that is a big number. We need to get that down. Need to get people back to work to get this economy going. And then Fannie Mae had a big release, big update out of Fannie Mae. You can read the whole story on the blog, but the takeaway here is 97% loan-to-value conventional loans going away January 2014. You're going to have to put 5% down after that to get a conventional loan through Fannie Mae. So if you're interested in that program, you better get a contract now before 2014, or if you don't have the 5% down, it's going to force you back to an FHA product. So look at the blog for that complete update. Now, in the local news, the next free first-time homebuyer seminar in Towson, Maryland is Saturday, September 14th. That's from 10 a.m. to noon at the Baltimore Sheraton North Hotel on Delaney Road. If you'd like to register for that, give us a call, 410-412-3319, or online, www.marylandhomebuyerseminars.com. Look forward to seeing you guys next week.